recorded.
We have the usual disclaimers. So one of the key things there is that please remember that this does not constitute legal, financial, tax, or other advice. We have downloaded the annual report and the presentation deck, uploaded it rather to the NZX, and it is available for download on the website, so you can read this slide in full. But we're keen to kick into it, so we'll start off. Introduce you to a man that needs no introduction, the old man of payroll himself, Asantha Wijeratne, our CEO and co-founder. Today, we're going to talk through a bit about the strategy that we've delivered on, what we've done so far, and we'll also talk a little bit about the strategy going forward from here. We'll then move into the financial results. I'll talk a little bit about that. So my name's Jamie Monaghan, I'm the CFO here. And we'll talk about the numbers. Then we'll move into a Q&A session. At the end, we have left some time for questions. If you do have questions, we do encourage you to please put them in the chat as we go through, so we don't have a flurry at the end. But of course, if you do have questions that arise during the presentation, please do add them into the chat, and Todd will help us to curate and answer those for you. Any questions that we don't get time to answer, or we're not able to answer in the room, we will endeavour to come back to you with answers to those questions. So please do send them through. This is also not a one-time opportunity. We love talking to our investors. So if you want to follow up chat or conversation, please reach out to investor@paysauce.com and let us know. Awesome. We'll get into it.
Thanks, Jamie. Welcome everybody to our briefing today. It is indeed a happy moment for us. We're reporting our first maiden net profit. We've had a watershed year in fairly challenging economic environment that we operate in. I'd like to say that the NPAT number was 1.23 million. Jamie will go into some of these numbers in detail. We managed to continue growing our ARR by 19%. We are well in the rule of 40, and we've generated just under $300,000 of free cash flow. So it's been a good year, but it's one of continuing to build on the platform that we've given ourselves. So I'll just take a minute to sort of explain what's going on. So from the time we started to now, over the last 9 years, we've built a payroll engine, which is the existing payroll engine that supports 5,900 customers in New Zealand and 1,400 customers in Australia and the Pacific Islands. That's the SmoothPay business that we acquired. And so it's two different platforms that we have. And the opportunity that we have now and that we're working on is moving all our technology into a new payroll engine that allows us to unify to a single solution and support our international customers, our domestic customers, and then look at the opportunity that also gives us in terms of the wholesale opportunity, which is the embedded payroll opportunity, and the micro business app. So this is a really, really important thing. It's one of the things that, as Jamie said, being one of the old men of payroll, one of the things that I've seen happen historically is that payroll businesses keep adding and piling onto the existing technology. And in 20 years, you're still hamstrung by some of those early technology decisions that you made 15 years ago. You're limited by that. And that's a trap that we are not going to fall into, and we will avoid. And what we're doing now, the new generation payroll engine will use today's technology. It'll give us a whole bunch of options that we didn't have when we started 9 years ago. Things are changing all the time, and this gives us an opportunity to build using the latest technology, and that gives us the opportunity for both the wholesale and the micro app. So that's what the Gen 2 payroll is about. It's really one of the key things that we keep reminding ourselves is, what's the problem we are solving for our customers? And the key thing is, being in business is hard, and what can we do to assist our customers to be compliant. And if you look at the thing that we're selling, it's peace of mind and time. That's the key thing that we're doing. We're looking to make the life of our customers easier by taking care of that. And that's what the new, that's always been our theme. And using the new Gen 2 payroll engine gives us the opportunity of not only the micro business app, which is for end users, it also gives us the opportunity for providing the solution to other players in the market to use our payroll calculator. And so we're talking about things like HR solutions. There's a whole flurry of people-related technology out there that does not have payroll, and the opportunity for us is how do we provide that payroll solution to some of these businesses out there that already have got a footprint in the market, that have got technologies that are assisting businesses with their employees, but not doing payroll. That's the wholesale opportunity that we're chasing. The micro business market continues to have the same kind of profile that we've always looked for. It is a significantly underserved market in our view, and talking to our customers, we know that. It is a really hard market to get into because you need scale. And then that's what we're continuing to build on. We've got to a point where we are now processing over $2 billion of payroll, that's a billion with a B, every 12 months. That's the quantum that we've got to, and that's through us providing the solution to 75,000 employees out there via our two products, SmoothPay and PaySauce. So that's the sort of quick background on what Gen 2 Payroll Engine is and what we're doing. So if you look at our plan going forward, is staying to the same themes that got us here. We've done really well to get us to this point, to give ourselves a platform, and the strategy for the coming number of years is about unifying the technology to one solution. So we are not supporting a myriad of different solutions out there. One solution, which is the Gen 2 engine, and that there are three pillars that we're looking at. So if you look at the first thing is our customers. So that is delighting them with the features that they're looking for. How do we make their life easier, simple, quick? Second, how do we provide our customers and their employees with knowledge around things around employment? So as I said, it's about peace of mind, and employment law is a tricky area. What can we do to help our employers be a better employer? To be a better boss is something that we take very seriously. It is how can we upscale our customers as employers. And the third is around the product itself. How can we make that customers can self-serve, it is easy, it is intuitive, and it is simple. And that is an ongoing task that we've set ourselves, is to how do we get to a point where our customers do not have to think about what they're doing. It is intuitive, it is easy to follow. The second is we've been really, really clear that one of our objectives on a financial point, now that we've got to cash flow and profitability, is 10 million ARR. We've got to 8. How do we get the next 2? Around that, we're working on improving our brand. Those of you in Auckland may have seen the PaySauce brand starting to pop up. We will continue to invest in that out-of-home marketing. We're looking to deliver a new interface. Again, put our hand up and say, over 7 years, things have aged, and how do we improve that? How do we provide an easier, simpler solution? And the third, in terms of growth, we're looking at how can we make use of the opportunity we have around the wholesale product. It is about refining that strategy. It is about identifying who the potential customers are, where are they, what markets are they in. In order to do that, we need to be scalable, and which is why the investment we've been making over the last 12 to 18 months around the Gen 2 payroll engine is critical. We moved to AWS. We're moving to a single payroll engine. That means that we are not continuing to add technical debt onto the product. We are facing those early. We're investing and making our solution a powerful solution. And so we're looking at how do we use, like everyone's talking about AI, we are quite aware that it is an opportunity for us. How do we use technologies like that in making the job for the customers easier, simpler, and more intuitive? How do we embed things like that? And about the last piece is about security. We are, every time you look at the news, there is another incident. It is about how do we make our solution secure for our customers? How do we protect the information that we hold? How do we protect the trust that our customers place on us to deliver that? And that is about making sure that we do everything possible around security of data and the money that we handle. So just to recap, the go-forward strategy is around product, and I've covered that. It's around people, and we've made a significant number of hires over the last 6 months. We've got pretty much the team that we now need to go forward and deliver on the strategy. And the third piece is around partnerships. Partnerships with other players in the market, partnerships with accounting firms and people who can give us scale and reach the kind of customers that we want. So that is essentially the plan for us. There's a lot of work. We're excited. We're making some really good progress. I'm delighted to see that our NPS number continue to strengthen. These are really, really important pieces as we scale the business going forward. So that very, very quickly is the plan. Obviously, any questions we're happy to take. And I'll hand over to Jamie in terms of talking about the results for the last 12 months.
Sure. Thank you, Asantha. Obviously, we're very excited to be announcing our maiden profit after tax. Just to be crystal clear on that, it is an after-tax profit before the deferred tax adjustment. So I just talked to that a little bit in the interest of transparency to make sure that we're not trying to make things look better than they are. The underlying profit after tax was $0.2 million. We have released recognised deferred tax asset. Now that we are profitable, we've had about $8.5 million worth of losses carried forward, and we expect to get the tax benefit of that going forward. So we've chosen to take about $1 million of the deferred tax asset available in relation to the assets that the tax benefit that we think that we can take over the next 3 years. There remains about another $1.5 million worth of tax benefit there, but we're not ready to take that yet. So we'll review that as we assess the profitability going forward. But there remains about $4.8 million of tax losses available to offset the tax charge going forward after that current deferred tax asset. Enough about tax though. The underlying performance is a very, very strong result, and we're very, very proud of it. We're very excited to be here. We've got an underlying earnings before tax number of just over $1 million, and that same equivalent number last year was just short of break even at $80,000 of a loss. It's a very strong result for us, a significant turnaround. Our profit links very closely to our cash, so you can see as well our free cash flow there has increased nearly $1 million as well, turning around our net outflow of $640,000 last year to be positive of $300,000 this year. So looking then at the key numbers within there, our recurring revenue is a key SaaS metric that we measure. It's very important as our top line indicator of our revenue going forward. So it's 32% increase, and I'll talk a little bit more in a second on that one. We've also increased our gross margins. The gross margin result there is an impact of two things, really. One is the benefit that we're getting through the interest income, and again, I'll talk about that shortly. But it's also a significant reflection on the improvements and the efficiencies that we've put into our support team, and some of those investments that Asantha spoke about in terms of scalability and operational efficiencies and the investment into our tech stack. Some of those results are starting to be seen in that gross margin improvement there. Going a bit deeper into the revenue then, the interest income is a significant component of the increase over last year. So about half of the increase over last year is in relation to the interest income increase, and the other half is in relation to processing fees. So the interest income for us is a real natural hedge for us. The benefit to us is obviously the increased funds that we get from our customers. We earn the interest from that, and it hedges against the challenges that our customers face with those increased interest costs. For them, makes those decisions about signing up to new software like payroll just a little bit harder. So we get that natural hedge in terms of that economic cycle when interest rates rise, and we get that benefit coming through to us on the float, obviously. Moving on. Looking at the overall results summary, these two graphs really tell the story really well for me. The revenue this year has surpassed the expenses, which is obviously something that we've been striving for and signaled for a long time now. And that direct correlation with the free cash flow is really important as well. The extra cash available in the business, the main expense that we have is in people, so we're able to determine where we allocate those dollars, in terms of our investment that we make, and we're able to keep a tight control on that, so that we can, pull and push on that as is required. We'll look at the profitability metric through the rule of 40. So the rule of 40, as Asantha alluded to before, we are achieving that rule of 40. For those of you not familiar, the rule of 40 is a SaaS metric that combines the overall growth rate in revenue, or in profit rather, the growth rate year on year with the profit percentage that we're making, and we use the EBIT percentage. We've seen investor sentiment change a little bit in recent years more towards profitability, so that kind of availability of capital from the markets with investors going for growth at all costs has changed and has significantly swung towards the profitability metric. So we're quite pleased to be reporting the profit in that space, and we see ourselves, I think in Shelley's letter in the annual report, we've got our destiny is in our own hands, and that's exactly right. We're in control of the expenses that go out of this organisation, and we'll have those following the revenue line. Moving on then to the reinvestment. We're focused here on the investment into the R&D space. Asantha referred to the Gen 2 engine that we have. It's really the critical investment that we're making, and the key component in that is it's investing for long-term growth. So the migration across to the new platform is our future strategy. You can see that we made a step change in the level of investment that we made into the R&D space in 2023, and we increased that further in 2024. And that's really the people costs coming through. And the other component of that is the investment that we're making is into the people who are driving that product. So it's investing now for the future, investing now for a platform that will enable future revenues coming through and better returns back in the long run. When we're looking at it internally, we generally use the SaaS metrics to review the customer journey that we have. These are the metrics that we measure ongoing. Every month we review these measures, and it's really to focus on the journey that our customer makes in financial terms when they're coming through our financials. So one of the key challenges with these is the definition of what we have. So a customer for these purposes we measure as somebody who's run a pay in any given month, and we know that we have natural cycles, so it's less than perfect data, but it's a really key indicator as to how we're tracking with our customers. So from a SaaS perspective, we're currently spending about $510 for every customer that we acquire. That's gone up slightly on last year, mainly because we acquired fewer customers than last year, and also we've spent additional funds, and that's just a reflection of the market and where we've put our efforts this year, which has been on focusing on the future product, not so much the current product. So it costs us $510 to acquire a new customer. Each of those customers, we then derive a monthly revenue of about $91 per month from each of them. Now that's made up of both the processing fees that the customers pay to us and the interest income that we earn on the funds that we manage on their behalf. So you've got about a 6-month turnaround in terms of recovering the funds of the acquisition cost, which is very reasonable in SaaS terms. We then have a cost to serve those customers. So that's mainly the cost of our hosting and supporting those customers. Now that cost has gone down $1 per customer from $22 last year to $21. And again, that's the financial metric coming through to reflect those efficiency gains that we've made in investing into the platform that we have and making those self-service components much easier for those customers, improving our knowledge base, giving the customers fewer reasons to pick up the phone and call us is a key component of that. And that's the investment into the tech that's gone through there. And then we look at how long customers stay with us. And customers stay with us. This is an inverse metric based on the churn percentages. The churn has gone up very slightly. It's gone from an average of 1.15% per month to 1.18% per month. And in these times, that's not an alarming metric. Entirely comfortable with that. And when you reverse that, it means that customers on average stay with us for 7 years. We have had a bit of a change in how we measure that, so you can read about that if you're interested in the comparisons within the annual report. Overall, you multiply all those together, and it means that each customer on the averages is worth about just under $6,000 to us. And when you multiply that by our customer base, it means our total customer lifetime value overall is about $43 million. We're happy to take questions now. Hopefully there's been a few questions come through on the chat as we've been talking. But yeah, I think Todd should be available to let us know if there's any questions.
Great. Thanks, Jamie. There's one question that's come through from Matthew Chen. Can you give us an estimated number of how many customers the wholesale opportunity could bring?
No. We don't provide future guidance, Matthew. Sorry about that. All we can do really is paint a picture of what we think that that could look like. We're in the early stages of that, so we can't provide indicative numbers on that. That would be guidance that we don't have that to. I don't know if you want to shine a bit more light.
No, it's at the early stage as we develop the market and get product out there and sign up new customers. We'll get a much better handle of the size of that opportunity.
Cool. There's no further questions that have come through in the chat.
But if there's anything else that comes through, happy to take it. Just to recap, we're really proud of the achievement that we've made. It is a significant milestone for us. There's a lot of hard work from a whole bunch of people committed to the cause that has gone in. I'm really grateful to be surrounded by a fantastic team, a great board, and finally a big thanks to the shareholders who support us and for continuing to believe in us and who have been there and who continue to be there for us. Really appreciate that. Thank you so much. And we look forward to any other questions that you've got sent through. We'll answer that directly.
Cool. Thanks, Asantha. So one question's just snuck through at the end here from Ian Frame.
Sure.
Just to clarify, it seems that the $91 of ARPU is actually monthly rather than annual. Is that correct?
Absolutely, Ian. That is that $91 is the average revenue per month. So if you compare that to the cost of acquisition, we're talking about a 5 to 6 month return, which puts us at the top end of SaaS providers in terms of our cost of acquisition is significantly better than the majority of the competitors that we look at.
Great. Thank you, Asantha. No further questions have come through.
Thanks so much.